We meet in an hour of change and challenge, in a decade of hope and fear, in an age of both knowledge and ignorance. If this capsule history of our progress teaches us anything, it is that man in his quest for knowledge and progress is determined and cannot be deterred. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win.
Well, welcome to another episode of the Energy Impact Podcast. Our guest today is Rokas Peciulaitis, founder and managing partner at Contrarian Ventures. Rokas, welcome to the show.
Hey, great to be here. Thanks a lot.
Yeah. Well, we'll get into all the cool things you're working on at Contrarian Ventures here in a bit. But first, tell us a little bit about you. Where are you from?
So I was born in Lithuania. So it's a tiny little country with 2.8 million population, which is around Baltic Sea, which is now referred as Baltic countries. I grew up there basically, and then went to university in Scotland, did a year abroad in California. So basically left part of home at the age of 18, and then went to work later into investment banking. That was from my very beginning of my career.
And was that something that you were like, I want to grow up and be an investment banker, or, that's how did that happen?
Yeah. So it's an interesting story, actually, kind of relevant to the current date, I think, in some respects. So I kind of started entrepreneurial part very early on. I think it was age of 14. It's kind of weird story. So I was playing this computer game called Run Escape. It was like it was a game basically similar to what NFTs are like now. So they have these kind of type of rare type of items that you can sell online. And I actually did quite well with that, being at the age of 14, 16, accumulated some wealth from that. And then I started investing at the age of like 16. And that sort of pursued me be interested in investing generally, I think at first in public markets. So literally at the age of 16, I couldn't open a trading account. So I think I did it on behalf of my mother, and then traded that through. When I went to university, that spurred me to start economics degree, or broadly finance. And I think from that day onwards, that kind of the more interest was spinning around being, trying to figure out how to be a good investor, a bit of a different construct. And I think at that point of time, when I went to uni, I realized that, trading was something as a career where you could, basically make bets and potentially invest in companies, primarily in the public side of things. And that's how I pursued the career in sort of trading, where I did internships through my university in places like Morgan Stanley, and then later in Bank of America Merrill Lynch. And that's where I landed with my first job. And that was sort of kind of always from the age of 16 through university, that the dream was pursuing dream.
What did your parents say to this, right? Like, hey, mom and dad, I made a ton of money, trading stuff on a computer game. Like, how did that?
Yeah. So that was pretty weird. I think I was generally like sort of really plugged into it. And I think it was weirdly interesting. So what I was doing, just arbitraging the market in a way. So I was buying, the game currency and then reselling it to basically Chinese purchasers, which then they were reselling it to other people that are playing the game. So if some people know World of Warcraft, so you have like rare items or currency in that game. So I was just doing that, and that did well. So I think I was playing the game itself, but at some point I realized, okay, there's a market opportunity, so I might as well go after it. And I think it was an interesting experience at that point, because in a way, the kind of features of that game are NFT market. It was like sort of virtue of owning some sort of like unique item, like a party hat in that context of that game. So yeah, I think it was spurred my interest generally in kind of technology. I think at that point I was pretty mature, so it was more through a gaming experience. But generally when I went to university, I think that spurred more interest subsequently in just trading publics, equities. Therefore, when I went to do my career, it was not necessarily in equities. I was actually working on one of probably the most complex products. So I was trading inflation derivatives and swaps and inflation linked bonds, which I guess in inflation context today matters as an asset class, but then it was very, very structured product and very much sort of a more derivative leaning product at that point, where I think, you know, the kind of knowledge and sophistication of what trading meant as a word was so much different from when I was 16, when I was just, and to be honest, like one interesting experience from that, you know, even though I was 16 or 17, it was I started university in 2008. So, and it was on the verge of financial crisis. So obviously I had my lessons and scars there as well, being a very immature investor entering the market at probably almost the peak. So I knew at that time, by the age I was 18, was the margin call was and things like that. So, so
you were leveraging early then, huh? You weren't just going long. You were doing some unique things.
Exactly. So that was sort of unique experience that led to sort of some interest to be more curious beyond just what's given to you. And yeah, that was a good foundation to be independent, which I kind of follow for my whole life to this date, I guess.
Cool. Yeah. Okay. So you leave home, you go to Scotland. How do you, I mean, inflation derivatives has to be a pretty small desk in the grand scheme of things here, right? I mean,
absolutely.
Why that?
So I think my journey wasn't as easy as that as well. I mean, I went to University of Glasgow, which interestingly COP is happening this week. So unfortunately I'm not going because we're too busy, but I would have had the pleasure to go there back after 10 years after I graduated. But interestingly, so yeah, Glasgow was not necessarily a target university. So I had to get my way through to get into that job eventually. Firstly, doing internships in Morgan Stanley, and then subsequently going and landing a job after an internship in Merrill Lynch. I think at that point of time, I think it was just an ambition to sort of, you know, kind of get it to a job that I was at that point thought was my dream job. And I think when it works, it's usually very sort of, you know, generalistic how you enter it. And I think from the background of technical knowledge and just generally the team that I liked, I ended up getting a job there and started there. I think through time, what you mentioned is only a few people trading that. To be honest, I think it's more like 30 people globally trading that product. It felt that not necessarily my skill set was best suited personally, and I didn't find it rewarding. So at some point when I was sitting at my desk looking at 8 screens and talking through a squawk with 8 brokers, I realized maybe that's not something I want to do for the next 10 years. And maybe I felt that at the time when I was reading more TechCrunch than looking at Bloomberg Terminal, that was the time when I should do something about it. So I kind of have a background history to how I found myself into venture, generally in more broadly technology. So I think a while back before I started Merrill, I did this unique program, which is called Create for Lithuania, which is back home. Actually came back to Lithuania for 9 months after I graduated from university. And I got invited to this program. I was one of the first 20 people who did that. And what's interesting there was that was the first time that I got to work with ecosystem as such, as a startup ecosystem. And one of my projects, we worked on 3 projects for 3 months, was to basically invite investor community to Lithuania and just basically create what now is called Startup Lithuania. And basically I got to meet some cool people from Israel, and one of them became quite good friend and now sort of a mentor, whose name is Avishai Abrahami, who's CEO of VIX. And through my career when I was in Merrill's, I would frequently fly to Israel. And I think that's what spurred my interest to somehow be involved more in this ecosystem. And that was my playground to learn and meet people that were very successful in that. And I think as that kind of, bug in my head keep scratching me to do something about it, eventually I kind of pulled the plug and said, look, this career is not for me. And I want to go after something that I felt very exciting. And in a nutshell, I felt even my job was going to be challenged by technology, given that it was so manual and so, OTC in nature, over the counter in nature, and it was more human interaction for a middleman. So implied that would have been disrupted at some point. And I think where we are now, if we look even 4 or 5 years back, this disruption is really getting unparalleled speed. So really that was the first step to see from grounds up of what it is what that ecosystem looks like, and more granularly leaning towards. So when I left Merrill's, the first idea, which at that point I was 26, was pretty delusional, I would say, to do my own fund. And obviously, naturally, what came to your mind was like fintech, because that was something that really, really kind of natural for me as an extension of what I was doing before in my career. But I think when I started to look, I knew two things as in a nutshell. One, that you could never compete as a generalist, because firstly, I wouldn't have probably even landed a job in venture, which I tried to do for a very short period of time, maybe a month or so. If you send a few CVs, and realized that I don't have a chance maybe there. It was pretty close knit, a small community. So I thought, okay, if someone is not invited, you probably might as well create your own thing. So what happened is I really thought, it's a unique opportunity to go after something, but it was always, my knowledge was always that I'm going to go after something sector specific, because you can go deep into the subject matter and build some sort of a moat. And knowledge and just understanding of the market. And again, you can create a differentiation, right? And that matters for, I would say, any company or even any investor. And so when I looked at fintech, I got to meet a lot of people. Funnily, Web Summit is happening now. And I think back in 2015, I went to Web Summit, which was in Ireland, and I got to meet a few investors. And I realized that already at that time, fintech and Stripe was already there, and a bunch of new investors, that someone like Mosaic Ventures in London were there, who were primarily fintech focused. Revolut was raising Series B, and 26 was raising Series A or Series B at that time. I realized that there's already that emerging category, and I'm too late probably into that. And I kind of went on to look for a sector that was not disrupted yet. And I think that parallel, when I start to sort of look at it, it was like, okay, so telco was kind of, in 2000 really disrupted by, a smartphone, that everyone got a supercomputer in their hand, and like the business model completely changed. 2008, I think you have Bitcoin to one part, to the other part, you have like the whole stack of finance being disrupted through fintech, and that kind of went onward. So, and then the natural next kind of industry that I looked at was like energy. Okay, that looks interesting. That has not been disrupted. It's sort of monopolistic in nature. It has interesting features of not being digitalized enough. And it has this weird thing that is called fossil fuels attached to it. And there's so seldomly called these 4Ds that people refer to about the disruption in energy, mobility, or generally in climate tech, that are decentralization, deregulation, digitalization, and decarbonisation. I think I was pretty sure of the three ones that were going to be driving this sector, like decentralization, digitalization, deregulation. I underestimated the kind of speed of light that we are currently today in, which was decarbonization part. I felt that was necessary. I felt that will happen eventually, but that shift is not necessarily going to be as fast as we are seeing today. So with that thing in mind, we went on with a few partners who were my venture partners at the time in 2017, July, to raise our first fund, which as the initial stage was relatively small fund. It was 6.3 million. Later final close at 12.5 million, and we've been investing since. And then later I was joined by my partner, Thomas, who I know better 15 years from my even school to university. Right? And he went on to do a bit of different career. He was doing M&A and corporate advisory, working with like large cap deals. And we joined force in 2019. And yeah, currently have investments in 18 companies. And what I seldomly said, not just building a firm, but building a community and a platform to help climate tech entrepreneurs at sort of early stage to get their first get-goes, to build these businesses that are transforming what we believe the largest opportunity over the last, 20, 30 years.
Yeah, no, that's a lot there, a lot to unpack. But I do want to go back to something that you sort of glossed over, maybe unfairly, or maybe, not giving yourself enough credit. So you looked for a job, and then decided to just build your own fund, and 6 million or final close at 12, pretty damn good for that transition. I mean, walk us through that process a little bit. You've done this mapping. I think the listeners to this podcast appreciate the thesis and the comments you made about the 4Ds, but there's a lot to kind of identifying that opportunity and going out and raising your own first time fund, right? I mean,
so I think Contrarian Ventures, just generally, like, people who come across as contrarian is a very strong word. I think in a general nature, to live up to that expectation, only a few people, I think, which I find as people that I would like to call someone that I would follow in my life. I'm just thinking someone like Peter Steele, that definitely been contrarian for his whole of life career. So I think to live up that is a tricky one. So I think the way I define contrarian at the very beginning was that it was contrarian to the thesis of the fund in 2017 even. And it was me personally, because we're going to raise a first time fund with the thesis that everyone looked like and said energy, really? Like climate? What does that even mean? What are you guys doing here? So I think it was in nature not easy. I think fortunate enough we had an LP, was an anchor LP in the first fund, which is actually a corporate, which is one of vertically integrated utility companies called Ignitis Group, which is publicly listed in the Baltics. And they backed that because realized that the opportunity existed there. So that was a bit of a easier play because we obviously had this anchor LP, large LP that gave this opportunity, and again betted in a way on the young team, and including myself and others in the team. But I think the timing was really great. I think at the very beginning, I think there were two types of investors. There were investors that survived this cleantech 1.0 and kind of did okay or well for that time, and they kind of continuously invested in the sector for the last 10, 15 years. And there were just a few funds. There were a bunch of corporate funds, and there were a bunch of like some new emerging funds, way less than you can see today, right? This is really expanding, and we're obviously super excited that this expanded because we feel that there needs to be more capital. But what we really saw was that unfairly there was really lack of capital in seed stage. At that point of time, when you set up a firm, when you're 26, with I would say still relatively little experience, and I would say still really little understanding of the sector, I think the way we approached this was twofold. It was very collaborative. So we went in the industry and really what we said community, we meant by it, and what we said by platform, we meant by it, and we tried to be helpful there. So created different initiatives that now kind of grew into something substantial, or at least meaningful for us, and hopefully to some other people that are in this industry. We really went with that approach to be open, to be collaborative, and then also trying to really go deep in the subject matter. Given that for the first, we felt that we want to pick a subject and going deep in it was the reason why we thought we could get a competitive edge by being that partner for entrepreneur versus a generalist. And that was always in our minds, that we want to be that partner, that first institutional capital for seed stage entrepreneurs. And we felt that all the corporates were not necessarily going that seed stage where there's no product market fit, or companies not necessarily can work with you or do pilots or do even full, commercial rollouts. So we wanted to be that notch earlier and build those relationships earlier. And eventually become top of mind for that particular stage and that particular category. And so we did from sort of day one with that thing in mind. And I think a lot of things sometimes in life just happens for whatever reasons, but we felt that, even back in 2017, where this decarbonization or net zero, let's say, goals were not necessarily that obvious, we felt that this will eventually happen. And gladly, like with everything, the sooner the better. And it seems that now it's amazing to see it, but I think every stage of it has different challenges, and we feel that it's still just very beginning of this. So I think very much grateful and kind of really I think it's amazing to see how you got this opportunity, but I think what matters is what you can do with that opportunity in the next like 20-30 years. And for us, we feel like we're just going to a seed or Series A, like a bit of a product market fit there with the timing and other things, but there's still a lot of things to do because we still run a small team and partnership, and really want to scale now that we have some knowledge and credibility in the industry, and we have a portfolio that can vouch for us, which at the end of the day, I say our LPs are and our portfolio companies are the best evangelists for us, because I can preach whatever I want here. but reality, they're the ones who tell the truth. So I think it's just a mixture of a lot of things personally that kind of came together for myself personally and for our team, and like gratefully to have partner like Thomas to work aside, So I think it's interesting timing. I think things from there onwards, from 2019, kind of accelerated. I think COVID is a one big also milestone that really accelerated this. I think it's both top down and bottom up, both from I think the consumer to top down from a government, or if you want to flip that, the other way around. And I feel like now this is sort of what people refer to as kind of called market zeitgeist fit for this particular industry, and it's great. And I feel it's still not enough what can be done, and we're happy to be a very tiny and small part of it.
Yeah, I it's interesting. One of the things that we get to talk to a lot of different folks at different parts of corporate growth and different parts of the capital stack, I think there's a lot of momentum. We're seeing a lot. You're probably seeing other folks enter that seed, Series A, Series B stage. A lot of software, taking the SaaS business model and applying it to energy around the digitalization and decentralization themes that you described. And a lot of people talking about how that enables decarbonization, but there's this sort of hard tech versus software mix that, it still feels like the hardware side is fairly underserved. And maybe that's just perception from my side. I mean, do you guys prefer one versus the other, or maybe that's too generalized of a difference? Talk us through that a little bit.
Yeah, I think generally we're sort of agnostic to both. I mean, we're sort of doing both hardware and software and what we call hardware enabled software. But I think one thing to step back from this is, surely this transition requires solutions that both enable enable companies, and then enable, certain things from just generally, let's put it this way, from them happening at the first place, not necessarily reaching the consumer first. So in any hard tech problem, you're actually trying to solve the core of the problem, right? And there are certain companies that will embedded not have a software element, and not necessarily in the distribution part, or just because that what they're trying to solve is a chemistry or physics problem that has been solved for the last 40 or 50 years, something like hydrogen, for example. Hydrogen existed there for better 50, 60 years, and there's a lot of people and a lot of dollars that went from corporate world to solve it. Not necessarily that there were, a timing of or technology that was de-risked at that time that could be commercially viable. And be certain elements like with solar or wind, that there will be some subsidies to help that to get into de-risk and to get that economical efficiency to a point where it's feasible for industry to adopt. But I think every part of it, the way you look at it and deconstruct the sector, what will lead us for, this net zero goals to be reached, encompasses all these solutions. So both the hardware enabled software, and the software. And on the software side of things, there are definitely business models that will be equally similar to any enterprise software business in generally in the space where generalists invest. But I think there will be some business opportunities that not necessarily generalists will look at and say that there is that type of scale or TAM opportunity. And I think for us, the way we look at it, I think one thing is very clear. In order to be a good investor in the hardware space, one needs to have a fitted team for execution of that strategy, especially if you want to lead rounds, and especially if you want to come way earlier. So TRL2, TRL3, when companies are just being constructed, when it starts out of research. So I think folks like The Engine do a really an amazing job as part of MIT. They take companies out of MIT, fund them, they have incubators, and then only later at Series A or beyond, the funds can step in, because then they sort of have certain de-risking element as part of and everyone has their own sort of spot in that sort of stage of development of the company. So I think the way we look at from a portfolio construction, we usually say that we invest around 60% in software businesses, around 20% or 25% in hardware enabled software businesses, where we feel that there is a requirement hardware component to scale software eventually in the next 3 years. So we aim that these companies have at least 50% of revenue coming from software in 3 years when they start the business. And then there's obviously a pure hardware place like hydrogen, like carbon capture and storage, and maybe some instances in battery technologies, where you will not have embedded software element in it, but they still benefit for enabled technologies like machine learning and optimization of those processes to de-risk these hardware technologies. So I would say software eventually is still kind of eating the world, as Anderson, Mark Anderson refers. But I think it is crucial to not forget that it's a bit of a different type of transition that requires vast of different technologies to be enabled. And we feel we need to look at all of them and not discriminate against another. Of course, hardware businesses tend to be more dilutive, and especially if you're a smaller fund, that will eventually, in some instances, could be more dilutive business models, because they require just way more capital. Again, takes more time to liquidity for the fund manager. But at the end of the day, the big ones that are being targeted are, in parallel, way bigger TAMs. They address really crucially, like in a hydrogen case, if you get it right, that's like a $10 billion plus business implied, because it's going to address like what 15 to 10% of total emissions by industry, like, steel, cement, oil and gas, ammonia, fertilizer. So that implied becomes a balance of the portfolio, because we still, again, while the impact is a very important part of it, we still are there to make a return for our LPs, a financial return, as a matter of fact, and we want to be smart about how we balance these bets. And I think in a hardware context, it's a lot of these are moonshot bets, right? But again, and sometimes not necessarily at the very early stages, you can actually assess them to a full extent. You then still put a lot of weight to the team, to their execution capabilities, to the quality of the research, which is validated by peers, and the research that becomes more not necessarily whether that technology will work, because the time will tell is part of if you made a good bet, but I think you always bet on people at that point. So I think there are groups like BV that are amazing investors, especially that are putting priority to de-risking these hardware complex problems, but they also have a vast bigger team to do that. We're obviously always seeking to co-invest with partners like that, and we have a few like one or two investments with parties like that, and it's great because every different party brings a different value add from that point to that team that we back, and different aspect to that journey of that team. So we try to position ourselves for a bit of different value added rather than kind of de-risking the hardware, because I think that's not necessarily our strongest point.
Yeah, no, really great color. And kind of the theme there, right, is that you have the Ds that you described are all sort of separate major transitions, and they're all sort of happening at once, right? I mean, it's this sort of crazy frothy environment, which I guess is exciting for you and exciting for all of us, really. Talk a little bit about how you evaluate people. It takes some different backgrounds to create new and different solutions, but there's some value of sector-specific expertise and execution. How do you balance those things, and are there other attributes that you look for as part of your management team diligence?
Yeah, I think to the people's point, which is probably the most crucial one for any seed investor, I think it's funny that still no one shoe fits all. I think stemming from experience from our current portfolio is the best reference point for me to make that comparison. I would like to have this conversation with you in 10 years, how that changed my thinking. But I think what we tend to see is there are different successful teams, some that come from the industry and solve a peculiar problem that they faced when they were, let's say, in a different fragment of the market. So for example, PVK is one of our portfolio companies, what I think of the fastest growing solar engineering software companies out there. David, who's the founder, basically had a problem when he was a consultant, when he's consulting the large enterprise clients like, Volvo or Google, when they were implementing CNI projects. And he realized that this kind of process was cumbersome of designing the system. And then he went on to create this new company, PVKs, and build a product on the back of his experience. And that is the best one, because they frequently say it's a software from engineers to engineers. And the funniest part when I see product market fit is when you look at the videos of them talking with the clients, where the client goes like, oh my God, where has this been my whole life? And that you see that, he touched the point that it was obvious to him at that point, and it was obvious to everyone else in that community, and he can build a successful business. And the metrics speak for it, that he nailed it from day one, because they were like sort of cash flow positive in month 4, and they never looked back, and they built a product that was required in the market. Or in other instances, with a company like H2 Pro, where we have a super successful founder, Marco Talmon, who has built three actually successful companies before. He built Viber, and then sold to Rakuten, and then built Juno, ride-hailing business altogether. And then his third company was something completely different. So it was always software B2C type of businesses that he built before. And then he said, look, I've been successful, frankly, in my previous life in the software only businesses. I felt like I want to do something that is really making a change in the world and kind of disrupting what's called a hard or tough tech problem. And he went on to give his best skills like that are fundraising and people management and hiring people and basically being that resource for the technical team that he pushed out, basically pulled out of Technion University that was working on de-risking the hardware technology for 10 years. So I think what's common between these two, it's not necessarily that they have the industry expertise, but they either are, successful repeated entrepreneurs or people that deeply care about the problem that they're trying to solve and are able to attract the best people on that journey together and convince investors, as a matter of fact, especially when we touch tough tech. I think people underestimate how important it is to be able to raise money at the early stages of these businesses. And I think the frequent, mistake that a lot of entrepreneurs do is they kind of go and rely at the early stages of the business to grants and various like government funding, which not necessarily give you speed. And I think in this transition, especially, and this transition being climate or net zero transition, speed is really of the most importance, right? It's not that we're going to go and disrupt the bank and we have 5 years to do that because I don't know what's going to happen after it. Like in this case, we do have a deadline in a way, and that deadline is pretty much not necessarily set in stone, but it's actually even evolving and dynamic. So it could even be worse when you expect. So in reality, I think what's amazing is to see people that are really can go in the market and on their own, not necessarily rely on government funding, and de-risk these technologies in step by step and make this a reality. So I tribute them, and I think you can see where people that can attract teams and build partnerships and have a big vision attached to it. And I wouldn't say that I know a secret sauce to how to detect these type of people, but I think you sometimes that's the beauty of investing. You need to do a lot of trial and error to understand. But I think implied hopefully with the brand that you're building and what you stand for that openness, you get across these people, and it's a mutual feeling. It's not just, hey, I want to take your money. It's actually a mutual feeling for what we're trying to do here together, both from our side and from their side. And that vision leads to that partnership that hopefully is fruitful for the next 5, 7, 10 years and builds a really category defining business that has both a financial return and an outstanding impact to the vision that the company is trying to build, which leads to this reduction of, greenhouse gas emissions, or really solving a problem that enables a virtue of a new marketplace emerging in this category. So I would say there's no one answer. I'm still learning. So like everyone else, I think is in the industry, given that how dynamic it is. But I think surely there is still a common denominator between these people when you see them. And it's not usually about the product necessarily at the early stages. It's really about the people that are trying to build that product and what vision they have for that product or problem that they're trying to tackle.
Yeah, no, that's really helpful color. I'm curious, is it something that you feel like, I know you're learning and it's evolving, and I'm sure you'll make mistakes if you haven't already, but do you feel like like you kind of meet someone and is it like an instant thing, or is it something, you have a few meetings, you go through the materials, you kind of walk through the economics, maybe a blend of both?
Yeah, I think obviously it's not as easy as that. And I think now that we're getting this flux of capital and a lot of probably people entering the space to build businesses there, it's harder to assess that. But I think genuinely, when you start going in details in business, especially in the hardware space, you just know which people have spent hours thinking about that problem and people that just said, oh, this is a great idea, I might as well do something there, but they have not fundamental basis knowledge of that. So the beauty of being specialist is that we do get usually more knowledge than someone that just starts to look at some specific topic when someone bounces by their desk with the pitch deck. We usually have done, both top down and bottom up analysis, like have identified all the companies. Investments that we do become from as part of our research, where we go reach out to the companies, kind of compare them each other and see who are the best teams out there, who are the best, most advanced technologies, de-risk technologies out there, and who has the best commercial traction or whatever the aspect that we, assess. And I think I wouldn't say that it's easy to just have it as one conversation, but that's the beauty. We never invest out of, I think you get these crazy stories, and you got it before where someone writes on a napkin a term sheet or someone does close the deal in 3 days. In reality, majority of the partnerships that we do eventually lead up from someone that we speaking to for like half a year or a year, have been closely tracking their progress. I'm not saying that sometimes deals happen very quickly, but I still fundamentally, we've already done the due diligence on the sector as a whole, and we have some sort of a view. And there's just a matter if there is a fit with a team, with their mission and various other things that we test as part of technology, for example, due diligence. But it's never a feeling type of decision, right? It's always a very rational decision. But I think with some people you could tell. I think with some people you could tell is just how confident they are, and how certain they are of what they want to achieve. There's a mutual, I think one important thing and underestimated thing that people don't take into account when they speak about what makes a good both investor or both entrepreneur is the coachability. Is like you ask questions, you challenge them, and you see how they react to it. Do they rethink? Do they come back to you? And these interactions matter a lot of like how that relationship will go. If it's going to be each one of us speaking about our own things and not paying attention to anything, or is going to be a collaborative discussion that will lead to better version of ourselves eventually post that discussion, whether that's a positive or negative one. So I think I value that a lot. And I value both that within our team and within like external, how we, speak with these entrepreneurs. And I think the most important part of like the new talent that is coming in the industry, I think is that a lot are trying to enter the space is not just because it's a quick buck, like in some places other like crypto, sorry for that, but I think there is some of that. But I think it's just, there's a newly crowd that like feel truly passionate about the problem that we're trying to solve here. And they just trying to be really helpful into bringing their own different experiences from different industries, like even fintech, to be applied in this. And I think that cross-discipline teams that are being kind of, put in one place truly have more chance to solve the problem versus someone that has been in the industry for 50 years doing the same thing. And they have, in a way, already a stigma to challenge something that has been there for quite a long time. So I feel the positivity around why, like Larry Fink said, there's next 1,000 unicorn companies are going to be created in climate tech. The reason for that is primarily not that because we have a big problem and we need to solve them and run out of time. It's just because the interdisciplinary amount of different, people coming in this industry and applying those skills to actually solve it through completely different solutions one imagines. So I think I'm very, very bullish on that. And I see that over the last couple of years, the quality of people entering the space is really phenomenal. And I think that creates an opportunity for us as investors to be able to back these type of entrepreneurs. And I think this space is really exciting. And I think the kind of setup of teams is going to be way, way different to what it was even like 3-4 years ago, where majority of the people that we're entering to the industry were primarily people from that industry.
Yeah, super interesting. And maybe a great segue for you to share kind of some of the other parts of this ecosystem that you're building out and how you sort of foster that collaboration, right? Share some of those efforts and what you've seen there as it relates to people.
Yeah, I think when we sort of, I think I seldom joked about this, but when you're, I called it ourselves the smallest fund in Europe, entering the space, being 26 years old in an industry that is really heavily dominated by like long-standing oil and gas people, and someone like being usually on average like 50 plus years old. Yeah. You're not necessarily at the very beginning when we started taken seriously, especially when this was not that obvious, like in a venture context. So I think we suddenly said that, okay, we went to a bunch of conferences at the very beginning, just tried to understand how the ecosystem works. And we sort of said, doesn't feel like there is a community there. It doesn't feel like, there's the oil and gas community, there's, just, utility community, but there wasn't really a tech community attached to it. I think that was one part where we said, instead of like we organized firstly, and back in 2019, our internal sort of LP type of, day where we'd meet our LP and our portfolio companies, and then would invite our other co-investors. And that through a couple of years grew into something that was like unmanageable for a team of 4 that we had. And we said, there's 2 choices to be made here. We either go and build the biggest energy tech conference out there, or we just scale it down to just our LP. And so we did the first bit. We said, okay, let's go and build something cool and for the community, and embedded to it that will give an edge for our portfolio to be able to be out there and talk about their solutions, to be able to meet all the industry and can invite people that matter to that discussion, not just everyone, just people that curiously care about the innovation, and foster more capital into it and build better relationships with other VC funds and corporates. And so we did. So now in a couple of years, we built one of the largest conferences in Europe. The aspiration is to build one of the largest in the world, hopefully one day, and build with a twist of Southwest by Southwest meets Web Summit in terms of that type of vibe. And then aside of it, we did some sort of a thing where we felt, okay, we need more representation for these entrepreneurs to be in front of investors. So what we did, we created this like competition that goes aside of the conference, which is called Energy Tech Challengers. And these, we get like 400 applications of companies, and we have 70 plus investors that are working as sort of a framework like X Factor. So where everyone pitches and go through different stages. So the reason being there, not about winning, but getting feedback. And we felt that that's important, and it's important, especially from industry where everyone has not a lot of time and cannot necessarily dedicate a lot of it for giving feedback. So crowdsourcing feedback from investors and serving entrepreneurs to get that and ability to maybe at the end partner with them. And then the latest initiative. So everything that we've done so far was always driven by extending our small team and creating value for entrepreneurs beyond our 24 hours that each of us have in a day, and do it in a way that is systematic and can scale. And I think the next one was same way, like we run, like we're very active to help our portfolio, given that we invest in seed to fundraise. So we think that fundraising is something that they lose a lot of time. Some fundraising is something that really they spend a lot of time instead of building the business. So we said we want to be as helpful for fundraising, and we kind of built from day one everything around building relationship with like later stage entrepreneurs, building with peers, that because we did a lot of co-investment as part of fund one, given the fund size was relatively small. So we build an initial list on Airtable internally, which would use our company to basically select the best investors, and we build it as a database so we know what other companies they invested, so there's no wasting time for them, and would then give them that list and do an introductions accordingly. And we said, okay, that works for our portfolio, that should work for anyone else. So we went on then to build Climate 50, which was an initiative like a ranking, and we have 190 plus investors now on that list, and eventually created a tool which is called Check the Fit, where any kind of company can go up there online and basically answer 5 questions, and they will get a customized list of investors that are appropriate for them in terms of geography, stage, and what type of sector they're in the climate tech context. So again, that became sort of an addition to that conference, where ability for companies to fundraise better and take that asymmetry of information, which we felt was basically, there was a lot of it. There was a lot of asymmetry of information when you go to conferences. There was a lot of asymmetry of information when you went to approach VC funds. The last one, given we're fundraising for a new fund, we felt like, okay, so now go to LPs. So we need more LPs to have more funds, therefore more entrepreneurs creating more investment. So the last one, as part of Climate 50, we're going to have actually a list of LPs that will see how much they're devoting of their capital to climate. So that's the last bit. I think that serves more the venture community, because we feel we need more funds, even though there's a new fund every week, which we're very, very happy. More competition not necessarily is worse. I think there's more opportunities still that need to be funded, especially in the hardware type of space. So definitely trying to build some, trying to give back to that community as well, being grateful of that we can exist and invest in these great companies and be small part of this, journey to net zero. And contribute in our way in an open source approach, where we feel that, if people go and update information, add people, we're just going to have it for the community. We don't necessarily want to make money of it or have an undue value, but we have the value embedded because we obviously get more deal flow and people approached us. And that's part of a grand vision of what we want to be as a firm. So I think a lot of it still zooms out to building a brand, building really a reputation, and doing it. Again, as I said, the biggest evangelist of our business is really our entrepreneurs and LPs. So serving them serves us. And we feel by doing that in that way, it creates some sort of a network effect and it scales. And that's most importantly for us, as we seldomly say that we invest in businesses that scale and have a network effect. So I think organizing yourself as a firm is equally important to not forget that you're a startup yourself. And I think that's how we approach it. And even though we're the scrappy budget, we build things that I think corporates can build with millions of dollars. So that's the most rewarding part for me, being a founder of the firm. Because in the respect, you're also building a company. You never forget, it's not just a fund you're building a firm that lasts for, next 20, 30 years. And that's how bullish I am on this sector, that this will be as a category. And I feel it's just an emerging category today. Yeah. So yeah, that's how I think we approach new things. And I think we'll continue to do so.
As we build this into strong brands. Occasionally, or
yeah, man. Like this has been, my wife could tell you that she's not happy with this timeline that I'm operating around. But I think right? Grateful. It's I think it gets harder before it gets easier, or the other around, people would say, when they get the later stage. But I think I think it's just, you need to be passionate about what you're doing. If you end up, or if at the end of the day you wake up and you're not motivated to do what you do, not a lot of good things going to come out of it. So I think that inner energy is very much correlating with the inner sort of passion for what we do. And surely beginnings are always harder than sort of when you get things up on ground. But I think equally, as I said, that community element helps us to outsource that. And a lot of people are, giving their share part of it as give back if something helps for them what we're building. And I think that helps us and eases our life. But surely, yeah, I think it's dynamic nature of this business is amazing. I think the only thing that keeps us awake at night is just, competition. How do you stay relevant? How do you compete? And I think that's why we're still over investing our time in brand. So I think at this point, we're certainly joking internally that our brand definitely outgrew our AUM. So now I'm working on that to get that AUM in line with the brand with my partner, Thomas. So that's the next part for us.
That's next. Yeah. Okay. So here kind of wrapping up, is that, 5-10 years from now, is the brand still outpacing AUM, but they're both much bigger? And, what does Contrarian Ventures look like? What does this community that you've created look like, in your vision?
Yeah, I think we still want to be true to where the stage that we are. I think we suddenly say we're super laser focused on the stage that we invest. I still find, I'm still a young investor. I've been in the industry for 4.5 years, though it felt like way longer.
You get to count some of your lumps from 08, I think.
So I think the way I look at it, it's still very early journey, both in terms of where the industry is and as a whole and where we are as a firm. But I think one thing certain for where we're going next forward, at least in the next couple of funds, is that we want to be focused and true to the seed stage. And we're going to be really single focused on that. And I think that there's where the least capital is available. And I think that's where the most opportunity in terms of return and impact exists. So coming these two together, I think it's a winning bonus for us. And we know how to help these companies at this stage. And that's where we want to be really focused for the next few funds. I think what's expanding a bit is probably with the fund two, we're still going to be implementing a similar strategy. So still Europe and Israel focused and still seed stage. Where maybe we'll do some seed plus or A rounds if we miss something that we really love to be part of. But in reality, I think it's just geography's focus that will expand. I've studied a year abroad in California at some point, and I still would love to get some Californian sun at some point in my life and maybe even go to compete in there. And I think, I've suddenly give a comparison to basketball. And especially because in Europe, there's like regional kind of focused and you have like inter-European and you have global. So it's like playing in national league, then playing in like European league, and then playing in NBA. I think eventually it still boils down to US where the competition is the biggest. And I think ability in like fund two, fund three is going to be just expanding more through geography angle rather than stage. But surely I think one step back, how I look at generally what climate stack stands for and more the cap table or like the stack of finance available in there. People underestimate how important the infrastructure is there. People underestimate how important venture debt is, which is still not there. So I'm sure there will be categories that will be interesting for us to look at potentially as investors to get involved. For example, venture debt is something that is very interesting because we see some of the companies that harbor element that need to finance that, and we're pretty strong on those technologies, or even something like hydrogen. If those technologies work, that will become eventually like solar. It was a technology, then it became an infrastructure. I'm less bullish on going to like late stage growth stage because I think there's so much capital there and there's just, it's just too competitive. And when you compete only on price, it becomes a bit of zero-sum game eventually in the long run. And we're not here for 3 years, 4 years. We're not going for a gold rush. We're going for like a long-term impact. And I think with that in mind, I think like our sweet spot where we can be competitive is mostly at seed and maybe some A rounds where we have a first hand of knowing these entrepreneurs before and building relationships earlier. But I think there's definitely equally interesting places of, venture debt and infrastructure at later stages, whether that we get involved directly or indirectly for someone as part of collaboration. That's definitely something that I would love to approach and see later down the road.
Cool. Well, super exciting. What a How many options you have in front of you is got to
So
be
actually,
fun.
one thing I didn't answer what you asked. What do we see ourselves in 10 years? I think very simple answer. Top of mind, top three firm to go to for early stage entrepreneur. So I would like to see every deal. I would like to be top three for every entrepreneur that goes raise a round in seed stage. That's my goal. And that feeds into whether your brand can stand for that. And that will be to be seen.
Awesome. Super exciting. Yeah. I mean, aim for the stars, right? Be the top dog. Super
that's
cool.
the goal, I guess.
Yeah. Well, really excited to see how it plays out. Thanks so much for joining.
No, thanks a lot. Thanks a lot. Pleasure speaking to you.
Our leadership in science and industry, our hopes for peace and security, our obligations to ourselves as well as others, all require us to make this effort, to solve these mysteries, to solve them for the good of all men and for the progress of all people.